Audit and Governance Committee. Before I start, just a few matters of housekeeping. No fire alarm is expected today, so for testing, therefore, if it does sound, please follow the signs to the fire exit and meet at the fire assembly point in the Civic Square. Please can I ask that you use your microphone when addressing the meeting and that it is switched off when you are not using it. Please can I also ask mobile devices are turned to silent. The meeting will be broadcast live to the internet and will be capable of subsequent repeated viewing, and by entering the Warspite meeting room and during the course of the meeting, councillors are consenting to being filmed and to the use of these recordings for webcasting. So without further ado, I'll move on to the first agenda item, which is apologies. So I'm going to ask democratic support for any.
Through you, Chair, we've received apologies from Councillor Chris Cuddihy and apologies from Councillor Stevens, and we've got Councillor Freeman substituting.
Thank you very much, and welcome again, Councillor Freeman.
Thank you.
Item number 2 is declarations of interest. Do any members present have any declarations of interest in respect of today's agenda? No? Excellent. Item number 3 then is to approve the minutes of the meetings held on 12th of November 2024, first of all. Hopefully you've had a chance to read through and check for any amendments and corrections. Are members happy to agree the 12th of November minutes? Excellent. And 11th of December 2024?
Not happy.
Okay, I'm going to do a show of hands. So, yeah, Councillor Finn?
Yeah, I need. Yeah, it's with regret that I cannot agree the minutes of 11th of December 24. The caveat was agreed to protect members' integrity and uphold the credibility of the committee. The wording in these minutes before you can be construed differently, therefore it cannot be held in context. Unfortunately, an officer deemed that only his interpretation will be allowed, and this is not in any way disrespectful to the individual involved, but something that may be addressed outside the room. As the chair of the meeting, I feel this is disrespectful to elected members. For the record, I requested that the caveat be inserted in full, hence 2 lines, and this be inserted prior to the vote as it happened on the day. I'm not in any way suggesting the proposition is amended after it was passed, only that the correct words leading to the vote are recorded as a true reflection of what transpired. I also expressed concerns in that as chair of the aforementioned meeting, that as with normal protocol, discussions on this matter should have been held with me. The importance of the caveat cannot be underestimated due to the members not having been able to scrutinise the budget. Most importantly, I ask you to note the auditor in the documents before you today, offering a disclaimer to the 3rd set of accounts. Whichever way you look at it, the committee needs to have full confidence in the ability to fully scrutinise all proposals, accounts and agree them. Remember, you're putting your name to them. Therefore, I'll be grateful if my concerns are minuted and I'll be voting against them as a true and accurate account.
Okay, so as there's a difference of opinion, I'm going to ask and see if other members are happy to agree the minutes of the meeting of 11th of December. Councillor Nicholson.
Equally, I wasn't present. I'll give my apology. I wasn't present because I'm not prepared to have 350 pages of documentation the night before, so I deliberately didn't attend, so I won't take part either.
Councillor Rainsford?
I was present, and some of the amendments did bear some alteration, the original minute. I'm not quite sure I would agree precisely with Councillor Finn if I'm being purely pedantic about it, about what was actually said and not said. Definitely the thrust of what Councillor Finn is saying, I would agree with, but I don't think I particularly feel that the minutes as now written are not a true reflection of actually what was said, because there has been an amendment made to it. But I do understand Councillor Finn's concerns and was supportive of him in the first instance.
Councillor Freeman?
I was present at this meeting and I remember we had a lot of discussion regarding the whole state of play that day, to do with the report, the timing of the report, and about accepting the recommendations. And Councillor Finn's quite right, he did raise about, but we haven't had time to scrutinise this properly and so on. I feel that the amendment that's been put onto page 16, where it says he was putting the recommendations forward with reservations, but was reassured by officers, I think that basically sums up the situation from that day. And that's not dismissing Councillor Finn's concerns at all, but I feel that with what's put in there, that covers everything. Thank you.
So that you feel that that notes Councillor Finn's concerns with the... Okay. On that basis, for those councillors who were present at the December meeting, are you happy for those minutes to be agreed? So it's 2 for, 1 against, and 3 abstentions.
So Chair, under the Constitution, we're going to record the names of how people have voted. So just for the record, lovely. Thank you.
And then last but not least, we have the minutes of the 14th of January Audit and Governance meeting. Are members happy to agree those minutes?
It's come to my attention. I've noted when Councillor Nicholson joined the meeting as he arrived late, but he's not listed correctly in the attendance. So if we can agree them with that amendment.
Members are happy to do that, then excellent. We'll move forward with the correction that Hannah's just mentioned. So, item 4, Chair's urgent business, there is none. So we'll move to item 5, which is the capitalisation update. And David, I believe this is over to you as Service Director for Finance.
Thank you, Chair. This one's been on the agenda for quite a while now, isn't it? With me promising to give you all an update on where we are on the capitalisation direction. So here I go again. I have nothing new to add to what I've said previously, other than just before I went away on leave, I chased again to say, where are we? Reminding MHCLG that we're setting another year's budget at full council next week. So I've got the assurance that that's okay. I've also got the sort of, I haven't got it in writing, but I've got the assurance that a decision is imminent. And I'm taking that at face value, because if we go back 12 months, I think I sat here and said, I'm waiting for something. And the way that the political cycle works, it was 3rd week of February that the leader actually got a letter. So I'm taking it on face value that there's something coming. So I will say again, as soon as I get something in writing, I will make sure that all members of Audit and Governance are fully briefed. And if there were any surprises in there, then we've got a meeting coming up fairly quickly to this one, haven't we, that I could use as a briefing opportunity. So, thank you, Chair.
Thank you. Does anyone, Councillor Nicholson?
Thank you very much. Well, thank you, David, for the update. Last year, we moved the budget meeting to try and provide more time to get matters clarified with the then government. Is it the intention as the Section 151 officer to provide guidance ahead of the council meeting on Monday to all members of the council in relation to setting a council budget with this outstanding, given the fact that you indicated we might get a letter after Monday, but before the end of the month?
Thank you, Councillor Nicholson. So I've actually included in the budget report that is going forward a section on where we might be, and I've given the reasons that I've just set out, and therefore my assurance that this is a legal process. So I've included that in the actual report, but I'm quite happy to brief anybody ahead of the meeting on Monday, if that's helpful.
Just ask a follow-up question. In the event that the decision of the government were to be different to what we anticipate the decision to be, what would be the ramifications for setting a legal budget? And is that being set out to members prior to a decision being made next Monday?
So again, Councillor Nicholson, in the actual budget report, it says, so what would happen if it would, so I've set out that...
So I haven't,
No,
although it's been issued, I haven't had a chance to read the agenda
No,
yet.
no,
so-
I'm not. Let's not go down that one again. So the budget report does say, what if? So I'm saying I've got confidence that we will get it, therefore we can set the budget. If it were to come through and they were minded to cancel it or whatever, it does say that I would then have to go back to Cabinet to discuss a revised budget. I'd obviously have to engage with Grant Thornton about what the ramifications would be. And then I also took it to the final stage, which is probably I'd be looking at a Section 114 notice or something because of the size of the transaction. But I'm confident that we're all working together to the same ends.
Chair, through you. Thank you very much, David.
Thank you. Councillor Finn.
As we're aware, the capitalisation comes in two parts. There's obviously the investigation and the capitalisation. Could you please confirm there is no communication with the Department of Local Government regarding the investigation? And what would happen if the conditionality that was imparted in the minded certificate is actually instigated?
Thank you, Councillor Finn. So I think I'll answer this one, and it might not be the question you've asked, but you can correct me. So as just to remind everybody, we had the Minded to letter in February 24, which set out Minded to subject to, and there were two conditions. One was that we have a SIPFA review of our governance, which I have reported here that unfortunately I can't share the report because it's not been shared with me, but it has, that report or that inquiry was undertaken, and if there was anything in there that I needed to be nervous about, I'm sure I would have heard by now. So that number one is kind of been done and dusted. The number two was they were minded to have an independent inquiry into the transaction itself. That is part of the decision that will come next week, hopefully. So it'll either be, there's a few options, aren't there? It'll either be we've granted the capitalisation direction and just carry on, or it might be we've granted it to allow you to continue with your budgets, but we still want an inquiry, or it might be we haven't granted it, whatever. But as we stand at the moment, I'm saying there were two conditions. One's been sorted, the other one is still at the discretion of the Minister.
Any further questions on the verbal update for the Capitalisation Directive? Okay, thank you. We'll move on to item 6. This is the external audit and the audit findings report for 2023 to 24. Jackson, I believe you're presenting this report.
Thank you, Chair, and good afternoon, members. So it's a fairly lengthy report on the agenda today. I'm not going to go through page by page, but I'll pick out some of the highlights and then invite any comments or questions. I'm going to start on page 26 of today's pack, which is entitled Headlines. So members will appreciate there have been a number of financial statements that have come to this committee in the not too distant past. So this will, I think I'm correct in saying, be the 5th set of accounts that have come, certainly within the year and probably within the last 2 or 3 months. Members will recall that the 2021 and 22 and 2022-23 accounts were subject to the backstop disclaimer in advance of the nationally set deadline. And the next deadline for this current financial year we're talking about is the end of this month. So I need to have issued an opinion by the end of the month. As would have been discussed previously, because of the fact of no assurance over those 2 sets of accounts that were backstopped, that means I don't have full assurance yet for 2023-24. So unlike those 2 previous years, we have done a significant amount of audit work. However, we did not have assurance over the brought forward balances and therefore some of the in-year movements as well. So that's not a Plymouth specific issue. And in fact, less than half of local authorities around the country have got a clean audit opinion, and that brought forward assurance. So this is absolutely a national point. And the national guidance sets out that it would probably be expected for 3 years worth of impact of those backstops. So 23-24, 24-25 and 25-6 will have some form of modified audit opinion as a result of those previous backstops, before hopefully then moving into an unqualified position in future years. Because of the time, and as I said, we've got until the end of this month, it's not realistic to have done another 2 years worth of audits to get that full assurance. So in line with that national guidance, the intention will be a modified disclaimed audit opinion on 23-24, with the understanding that audit work has begun and that regaining of assurance has already started. So the detailed work for this audit began in October of last year, and we're currently just finalising some of the last few queries and quality reviews before ultimately issuing that opinion by the end of the month. There were 2 adjustments identified to the financial statements and some further adjustments that flowed through from the prior year set of accounts, because these were published in draft prior to the finalisation of previous audits. So therefore, findings from those had to be incorporated into this set of accounts as well. I think on that basis, it's worth me saying at this stage, a huge amount of work has gone in by both my team, but importantly also David's team, to get us to a point where we have actually completed much of an audit in 3 or 4 months, which, if you compare some of the previous years, that has rapidly accelerated. And I think continuing that momentum is something we're all really, really keen on ensuring to get us back to an unqualified opinion. So when I issue the audit opinion, the one thing I won't be able to issue is the audit certificate. That formally closes the audit. I'm unable to do that until the National Audit Office complete their work on the whole of government accounts. So your accounts, the accounts of all NHS bodies, etc., are amalgamated together to form the whole of government accounts. What the NAO have said is they need to conclude their work before any local government auditor can formally close the audit. So in prior years, that was important because members of the public could have still raised an objection on the accounts until that certificate was issued. Under the current regime and legislation, you can only object to the accounts during a certain 30 working day period, which has passed. So in reality, there isn't an impact of me not issuing the certificate, other than the council is not able to say it's fully concluded the audit. It can put up the audited accounts, in my opinion, but the notice of closure of the audit can't be posted until that point. Over the page then, my other responsibility is in respect of value for money arrangements. That detailed report was discussed back in November at this committee. I've not brought that again, given the discussion is on arrangements to the 31st of March 24. That paper remains valid and will be issued as a final version alongside my final audit opinion. Going through some of the detail of the report then, and as I said, I won't go through every page. So page 30 of the agenda pack, just as a reminder of the materiality levels that we set out in our audit planner that the audit was completed to. So overall materiality of 7.7 million and a trivial threshold of 385,000. What that means is any errors or uncertainties above 385 have to be formally documented and reported within this document. Any errors below that are certainly discussed with management, but don't need to be formally reported in the audit findings report itself. The next few pages then set out the work that we undertook on the significant risks that, again, we reported to you in our audit plan. The first area on page 31 is management override of controls. So this is a presumed risk at any audited entity, whether that's public sector or not, and it's not rebuttable. A large area of this work focuses in on journal entries, estimations, judgments. So the testing of journals, as we report here, noted a couple of issues in respect of posting of journals, and these have been certainly discussed in the past, or at least one has. So it's around the approval of journals. So as an external auditor, we would always say there should be 2 people involved in posting a journal, one person preparing it, another reviewing and approving it. The council does have a policy for review, but that's set at a value threshold of 500,000. Partway through the year, or in January 24, an additional check and control was implemented by management in respect of journals. But we would always say if every journal is not authorised, we would always have some form of comment in our audit report saying, in our view, and in an ideal world, every journal would be, we appreciate the council has a policy, and given the number of journals that are posted, again, understanding that cost benefit between the resource required and management's perceived benefit of that. I think what it's important to say is, despite those approval thresholds, no issues were actually identified with any of the journals that we reviewed that had been posted to the council's financial ledger. I'll move over to page 33 next. So the next significant risk relates to the valuation of the council's land and buildings. Again, a very large value, lots of estimation involved, and management make use of management experts, expert valuers, to provide them with those valuations. In the second half of our narrative, in the commentary section on the right, we identify some of the issues we identified as part of our work. So there's a couple there where incorrect things have been put into the asset register, so that they're more transposition errors, if you will. So 2 libraries where the values had been incorrectly posted against the other library, and one where the land and building element of an asset had been cross-posted. So instead of it being the land value, they'd posted the building value and so on. So they net off to nil. It's more just classification points. We also identified, so as part of the 22-23 revaluation entries, the depreciation change had been posted in the new financial year rather than the old financial year. So that required a disclosure amendment in the accounts, but ultimately the values were correct. And the final point was a bit of a hangover from prior years and relating to COVID, where valuers used to disclose a material valuation uncertainty. That wasn't the case, and that the accounts just needed to be amended to say that that was the case. So over the page, the other final element of our land and building works. So we undertake a lot of very detailed work on the valuations and the calculations. We identified some factual errors and changes, which 3.9 million have been updated in the final set of accounts, and then some further estimation differences, which when we extrapolate over the total population were 3.8 million. Those we're not saying are wrong, but the supporting evidence wasn't sufficient to allow us to conclude fully on those areas. So we undertook alternative procedures that suggested they could be up to around £4 million different. That's not adjusted because that's not factual. I said that the actual adjustment posted through the accounts was the 3.9 million. Similarly, over the page, the council's investment property portfolio, there were, to a lesser extent, but some other findings in respect of valuations extrapolated together, talking again similar themes here, extrapolated, they came to a potential 750,000 overstatement. That's not adjusted because again, that's an extrapolated calculation, it's not factual. And then finally on the risk areas, the pension liability. So we rely on assurances provided by the pension fund auditor. Within their audit of the pension fund, they identified some variances in asset values, largely due to timing differences. So the council and the pension fund have till the end of May to produce accounts. We're talking to you now in February, where actual results are a lot easier to obtain. So these are timing differences on the pension fund audit. The impact on Plymouth with your share of the assets would be around 2.6 million. So again, that's not updated in the final set of accounts. And the accounts were closed on the best information that you had available. Okay, so the next few pages go into a little bit more detail around some of those estimates and some of the other changes in respect of property, plant and equipment on page 39. IT controls is another area we review, which is page 42 of the pack. Our IT audit colleagues undertook work on major IT systems that impact on the financial statements. There were no significant findings from that work. The one area raised was around, again, a segregation of duties, potential conflict within Capita 1 and around admin access rights. You'll see our recommendation on page 43 in the management response. Once again, we didn't identify any actual issues arising from that, so there's a theoretical risk there that we bring to your attention, as well as some control recommendations around some of the property, plant and equipment findings. Just touching on pages 47 and 48, because of that proposed modified audit opinion, again in line with the national guidance set out by the Financial Reporting Council, the audit opinion itself doesn't give any comment on the going concern assumption or the other information included in the statement of accounts, which is, again, national point, so we're not saying there are any issues there, but because we're disclaiming we are unable to fully conclude on those matters. For transparency purposes, on page 53, we set out the non-audit fees that are also payable to Grant Thornton in respect of the certification of various grant claims, so teachers' pension return and also the housing benefit subsidy return. They are consistent with work we've undertaken previously and don't believe that they create an independence threat to us as your external auditor. And then into the appendices then, so the action plan, which is the management recommendations that we've raised as a result of this audit, are included in Appendix B from page 56. You'll see responses from management to all of those. Page 60 and 61 then set out the adjustments made as a result of the audit, both to values and also disclosures and classifications. That goes on to page 62 as well, apologies. And then page 63 is those areas that adjustments are not proposed. As I said, you can see the values there, so none of those individually are material or cumulatively are material. And then the final page, 64, is our proposed fee with the bottom two lines, so the use of experts and the ISA 315 proposed fee subject to PSAA approval as well. So quite a lot of detail there. Apologies, Chair. It's quite a technical document, but I thought it's worth giving a flavour of some of the findings and to give some assurance of the level of work that has been undertaken on the 23-24 audit.
Thank you, Jackson. So I'm going to ask committee, any questions on that report? Councillor Freeman and then Mrs Benny.
I actually have a number of things going through the report. Some of it will just be from perhaps me needing to understand things a little further. Do you want me to go through it all now or do stuff one at a time?
Give us the first one,
Yeah,
and we'll see if we can just roll it or whether we need an answer, if that's okay, Councillor.
Okay, thank you, David. Okay, so on page 26 of the bundle, it talks about the conclusion of the hot review of the financial statements. Can you just explain to me what is meant by a hot review?
That one's for me and it's fairly quick. So at a fairly regular interview, colleagues in our financial reporting team will do reviews of draft accounts. It's called a hot review because it happens whilst the audit is underway. And so they will review it from a technical point of view and say, do these accounts make sense in their technical mind compared to accounting standards? So it'll be, we've reviewed it, here are some things to think about or questions to ask. So it's a final conclusion of that.
Do you want me to carry on? Oh, thank you. It helps when it's on a roll, you see. It helps me a lot. Thank you, Councillor. Okay, on page 31 of the bundle, where you talk about the posting of journals, and I know you went over that and explained about that just now. So, but again, just for my learning experience, perhaps, what officer level are able to authorise up to the 500k, please?
Through you, Chair. It's a it's a essentially lead accountant and lead accountancy manager level and above that would approve journals. And Jackson talked about some changes we'd made to journal approval processes in the year. We removed access from anyone who wasn't an accountant to be able to post a journal and approve it. So anyone who isn't an accountant cannot process a journal without it being approved by an accountant. What we have to weigh up with journal approval is the risk associated with the amount of work involved. And we probably have 2 million transactions going through the ledger a year. So that's a sizable proportion. So, and also to some extent you could say someone could approve a journal but not actually understand what they're approving. Just to have someone set a second officer approve it doesn't mean that it's right. So we tend to concentrate more on the reconciliation processes that we have within the ledger and rely on more certainty around those. So I hope that helps to explain.
That helps massively. I wasn't aware of that, so that's really good.
I'm just going to ask, because I've had 2 more hands go up. So we've got Mrs. Benny and also Councillor Rainsford. I'm going to bring Mrs. Benny in now, I think, and then Anne will return to you.
Okay, thank you. It's more general in terms of the question I've got. So it was about when I read this, obviously that you can't provide a full opinion because of the process that's happened over a period of time, and I suppose the bit for me there is, okay, you can't provide a full opinion, but is there anything there that's niggling at you in terms of a going concern or any other issues? Because I suppose you get from it a picture, irrespective of the very formal processes that you go through, and I'd just be interested to hear that, please.
So, based on the work we have been able to do and the assurances we've been able to get, the short answer is no. I could extend it out, but conscious I'm getting lots more questions. Is that okay?
You're happy that there's nothing that's there looming?
The key things I need to bring to your attention are in the report, absolutely.
So I'm going to bring in Councillor Rainsford and then return to Councillor Freeman, if that's okay.
I was actually going to ask a question about journals and posting, but Carolyn's answered that very fully, so thank you for that. I'm going back to the IT page, if I may, and I'm pleased to see that there are no red flags anywhere on there. But there is an issue about 7 user accounts having been granted admin roles, and the auditor's feeling that a report was required from the council to explain that no inappropriate changes have been made. Is that going to be provided at some point? Page 42, Capital One Academy, read across.
I can take that one, Chair. So we've subsequently received that since this report was drafted. So given the time change between getting this in for papers, we've had that confirmation from colleagues.
No, I appreciate the time lag and thank you for the clarification.
Councillor Freeman, back to you.
Thank you. So with regards to page 33 on the bundle, the fixed asset register. So with the errors, misstatements that have taken place, is it just a percentage of the FAR that is checked, or is all of the fixed asset register checked? So, if it's a percentage that has checked and some of these things have come to light, does that then perhaps give a prompt to check everything that's on fixed asset register?
So I think that one's probably for me. So we don't test every single asset on the asset register every year. We would do an overall reconciliation. So a couple of those areas I mentioned around valuations being posted against the wrong thing, we would do a global reconciliation, as would generally management say, have the numbers from the valuer's report appeared on the asset register as we'd expect. the detailed testing of assets is done on a sample basis. So we wouldn't necessarily look at everything. So in my presentation, when I talk about extrapolations, that would be us saying, we've tested a sample. In simple terms, this is the percentage error rate within that sample. If we project that over the rest of the untested population and say we'd expect to see a similar error rate, this would be the outcome in terms of a financial value. None of those were material, but we don't necessarily test then every single asset. We do raise a recommendation around some of the asset accounting. It is a technical area, just in terms of that review and assurance that those postings have been made appropriately.
It's gone off. Okay, thank you. Sorry, David. He's laughing at me now. Can I ask, page 35, where we talk about so the extrapolated error of 402k. This is a net of 998k overstatement and 596k understatement. Can you just explain a little bit? Again, this will be for my understanding, for what's in front of me, and Alison's. What exactly do the effects of under and overstatements have?
So, okay, thanks, Carolyn. So this particular page is talking about the investment property portfolio. So obviously on the council's balance sheet, you'll have a value of what the valuer says all of your property portfolio is worth based on the valuation method they're required to do. So clearly an understatement would be us suggesting that the number you report is lower than it should be. So if you report 1 million and it's 200,000 understated, in our view, 1.2 million would be the appropriate number to record, overstatement being the opposite way. Generally, because again, we test this on a sample basis, you'll have some errors, uncertainties that will go one way, some that go another way, which is why ultimately we report that net position.
Just through you, Chair, just in terms of context, investment property values is 223 million. So that extrapolated error is tiny. And I should point out that we have well over £1 billion worth of assets as a council. So in terms of the value, these are really quite small figures. And I think they were errors that the valuer she'd overvalued one possibly and undervalued another. So the net effect was, as Jackson explained, was that impact. But we wouldn't adjust for it because it's below materiality, which for us is 7.7 million.
Thank you. Sorry, I did say I had a few questions. So on page 37, we talk again about items that either are or are not materially misstated. Is there like a value of what is classed as materially misstated? Only it talks in the it talks about a figure of £4.9 million, and of course in my mind I'm thinking, well, that's a humongous amount of money, but obviously I realise in the grand scheme of things it may be in accountants and auditors' eyes a very insignificant amount of money. But what is there like a value line that is set on that?
So yes, so for this year it's that 7.7 million that Carolyn just described. And I think it's also that context that Carolyn just gave of over £1 billion of assets. I think we report here on that page just under 620 million land and buildings. So absolutely take the point. These are large numbers, but the types we're talking about, things such as this building or Ballard House or land and buildings the council owns. So within their nature, capital items are millions of pounds generally.
Through you, Chair, I was just going to point out also that none of these valuations have an impact on council tax or on the general fund or the budget. These are all calculations that are done for the statement of accounts.
I'm just going to bring Councillor Rainsford in because she indicated
It's a very small point and a bit nitpicky, I suspect, but, you know, if it doesn't make sense, we'll ask it. On page 44, we're still in the IT, and we're looking at generic accounts being set up. And Jackson, you weren't able to test the generic database accounts control. No controls in place to actively monitor the usage of the generic database accounts. I see it's an amber in your view. Is that something you're having discussions with the council about? Will the council able to answer that?
These are generic accounts that we have. For example, we have to have an account set up for Civica to access the database. So there's an account for separate company of Civica to access our database. We also have an auditor inquiry access. So all of the privileges are that all they can do is view data. But what I am going to do is just, we will create a report that generates that we can generate with any transactions that these accounts may undertake, so that we can monitor the activity.
So you'll be setting up something which will highlight those transactions or interactions, and you'll be able to see who's doing what, where?
In theory, because an auditor, if it's inquiry access, all they can do is inquire. So we can query the database to see that. But we don't have many of them, and a lot of them we've shut down, pending of following this review.
Yeah, no. I appreciate from what you're saying, it's not a huge area of concern in terms of the numbers involved. But nonetheless, I was seeking some reassurance in terms of people's access to data, and you've been able to offer. So that's helpful. Thank you.
Councillor Freeman, back to you. Thank you. I am nearly at the end, I can assure you. So on page 57 of the bundle, we, under one of the management responses regarding the testing of assumptions used for land and building valuations and what was identified as a result of that, it says in the middle paragraph regarding the valuation reports, this unfortunately was not possible for year ending 2024 due to the late issue of full instructions to the valuer, leading to a significantly reduced timeframe for issuing valuations. So why would the instructions to the valuer have been issued late? If we have an audit every year, surely it's kind of like similar instructions going out to the valuer every year, so why would it be late to them?
The only comment I could probably make is that my team have been managing 5 financial years for the last year, and I think that has put pressure on the team, and that's probably why we were late in issuing the revalue. And also we were trying to agree a way in which we could accomplish achieving all asset valuations within 5 years, because we have a limited valuation resource and we have a lot of assets. So it was we were trying to agree with the valuers a programme that they could achieve, but would mean that we would have all of our assets valued within the 5 years.
Through you, Chair, I think it's just the point that we made earlier, that this year will hopefully never be repeated, where we've had 5 sets of accounts signed off in one financial year. So we don't want to go there again. But yes, you're absolutely right. There's a cycle. So we close the accounts, we get them valued, etc., etc. The problem that we've been having with 5 rolling years is knowing when you've finished that, year 2, for instance, to say, now I want to commission year 3. So not wishing to distract them by saying, can you look at this? Well, they're still working on year 2. So there's a bit of a knock-on effect there. So I think we've got to just work our way through this, and unfortunately, as Jackson's pointed out, it's going to take a little while to get back to that sort of status quo, but just bear that in mind, I think. Thank you.
Mrs Benny, bring you in now.
Through you, Chair, there's probably one for me. Thank you, Mrs Benny. On a monthly basis, the corporate management team set aside a session currently called the Change Board, where it's a dedicated 2-3 hour block looking at the transformation and the change programme. We are currently working on a new paper to go through to council in March, and that will be good news to our auditors, because one of their recommendations is that we keep revising our medium-term financial plan, etc. And this is a big part of that. So we will be looking at the governance again, but be assured that on a monthly basis, the corporate management team do get reports and do deep dives into the transformation programme.
Councillor Nicholson, you indicated.
Yeah, thank you very much indeed, Chair. Just a very sort of general point, picking up on the auditor's sort of introductory comments. In relation to the disclaimer and the national context, are we today being asked effectively to sign off the auditor's opinion? Therefore, where would the liability lay if the disclaimer issue isn't resolved nationally? Do we then pay the auditor to do more work over and above the agreed fees for this particular opinion and financial year? And what would happen in the event, even though it's low risk, in the event that the whole sort of situation in the National Audit Office didn't resolve itself? This would just presumably continue for the next few years until such time as the National Audit Office are satisfied with the national context that you can actually not then have a disclaimer. So is that set out what we expect the National Audit Office and the timescale for them to resolve their matters, for you to not then have a disclaimer on the accounts? Please, thank you.
So, thanks, David. So there is lots of active conversation on this still. I don't know if you'll be pleased to hear or not. I don't know which way it is. So it's not fully resolved, that is fair to say. There is change proposed in terms of some of the governance around local audit, so an intention to set up or create a new body, the Local Audit Office, where functions from various current bodies will transfer. In terms of the disclaimer of opinion, so for 23-24, when I issue a disclaimer, that will stay forevermore, if you see what I mean. There are certain, or the majority of the values within the statement of accounts you would normally expect to be able to regain assurance on them over that three-year period I referred to previously. So if you think about in-year transactions, so income and expenditure, generally the disclaimer this year is because we can't say some of those movements came from the right starting point. By the time you get to year 3, you're not reporting any comparatives on those periods, so you're back up to getting full assurance. Similarly, we've talked about assets, so it may take a little longer if not every asset is valued until a 5-year cycle. 23-4 being year 1, by the end of that 5-year cycle, then everything will have had a chance to be audited. I think the challenge that is still out there, and it's the key challenge really, and it's the important one, unfortunately, is around reserves, and certainly the usable reserves, so general fund balance, because every single transaction goes into the general fund balance one way or another, or is reversed out. So without doing a full audit, how can you get the assurance over that number? And that's what is currently being discussed. A number of options being put on the table in terms of how do you get back to that full assurance piece. So we at GT are actively involved in that, as all the other local audit firms are, but that's the area that is probably the grey area at the moment, and unfortunately that's the important one for yourselves as those chartered governance and members in terms of budget setting, etc. as well. So that's the current context, I would say. There is some, and I'm not sure if you've seen it, there is some SIP for Audit Committee guidance in respect of the backstop, which again sets out that timetable I've just described of regaining assurance. David, I didn't know if you wanted to say anything more.
Thank you. I don't think I've got a lot to add to that other than we are working to the national timetable and everybody that you can think of is involved in that. Financial Reporting Council, PSAA, external auditors, us as a local authority sort of group are all having our input to that. I think it's encouraging that we were working through a process under the previous national government, and when we changed into the new government, they didn't throw all that work away. They said that is making sense because we are where we are and we've got to get through it. I think the only thing that they added to that possibly was a little bit more pace, which is why we're here now, you know, with a deadline of the end of February. But I take that as a positive because the sooner we can get through this, the sooner Jackson and the team and Caroline can get back to that sort of natural beat of closing the accounts. And because the frustration from you, I'm sure, certainly from me, is it's great that Jackson's issuing an opinion on 23-24 now, but it's not the complete one that we would have had normally. But we've been sat here for the last 12 months talking about things happening in 2019 and 2020. And my answer to value for money and sustainability is we're still here. So, you know, it's great we've got a report. So we're all working very hard to get through. Unfortunately, it will take a little time. But I think the question from you, Mrs. Benny, which was a direct question to Jackson, is there anything in there that you think you ought to be flagging up? And they've done enough testing and enough work to be able to say, you know, they're comfortable with what they've been able to do. So I think we just have to, you know, we've come a long way and it's been painful. We just need to sort of keep going for a minute and it will all come good.
Councillor Nicholson.
Yeah, thank you very much indeed for both those answers. Much appreciated. So just taking into account Jackson's highlighting the area of concern being sort of the general fund, is that being taken into account then in and this probably moves the agenda on a bit, but in terms of setting a new budget in relation to applying risk to that process of how much we have is effectively general fund and reserves, because we're not sure what the base figures are, and therefore there might be some movement because of the previous year's accounts. Are we applying sort of a risk value to the funds that we hold in the event that they should be less than we think they are?
So again, a good question, Councillor Nicholson. So it falls to me as a Section 151 officer, as you know, during the budget cycle, to put in a report that says, what have I looked at? What comfort have I taken? So it's not for the auditors to say whether the reserves are at the right level. They can comment, obviously, but it's for me to make sure that I am satisfied. So that's my report that goes in. So I'm kind of almost doing a side job of what Grant Thornton are doing, which is looking at the numbers and satisfying myself. So I can say that the budget's going forward next week, and I've undertaken that review, and I am satisfied that we have, you know, enough balances there for what we require. Would I like more balances? Of course I would. But I will have lots of conversations, I'm sure, with Jackson and his colleagues about you need to have a policy to build up your reserves, and are you sure you're giving enough money to adults and children to keep the service going? So there's that delicate balance. But I undertake a review. I have satisfied myself that we are okay.
Thank you, Chair.
Any further questions on that? Okay, so, Councillor Freeman.
I'm sorry. Right, this is my last one. On page 63 of the bundle, when we talk about audit adjustments, and because we, as the A&G committee, are required to approve management's proposed treatment of all items recorded within the table below, I just need to have my head straight around this, please. So there's a number, there's 1, 2, 3, 4, there's 5 items there that are unadjusted misstatements, and the reason for not adjusting is not material. So can somebody just go through that table and explain to me why it's not material, please. Thank you.
I'm happy to. I think we mentioned that the level of materiality for us is 7.7 million. And you can see at the bottom, the overall impact of these changes would be 2.2 million. And 2.6 million of the change is something that we weren't even aware of. It's only come to light because Grant Thornton audit the pension fund. So it's not something that we would even have been aware of. It's our share of the Devon local government pension scheme error. So I wouldn't even know where to begin changing that. So I think on that basis, you can take some comfort on the fact that we're not putting through those adjustments for the amount of work involved, because they would have negligible impact on our balance sheet or our comprehensive income and expenditure statement. So I hope that gives some reassurance.
Again, it was just about gaining that understanding, given the fact that like we literally put our names to approving this. So, but yeah, so thank you very much. Thank you, Chair, for putting up with all my questions.
Through you, Chair, just not wishing to prolong that, but I think it sort of comes back to that. We were talking earlier about journals and risk and reward and that kind of discussions. So it's there, it's set out for posterity that those were the recommendations and findings from Grant Thornton, and we, as management, have said we're not adjusting because it won't affect any of the numbers or the valuation of the company and so on. So it's there, but we recognised it, and you know, so I think you're okay.
Okay, so with all the disclaimers and everything contained in that report, is committee happy to note those external audit findings? Excellent. Thank you. So now move on to item 7. This is the approval of the statement of accounts for 2023 to 24. Carolyn, I think you're leading on this one.
Thank you, Chair. As you've just recently received, or we've been through the audit findings report, this is the final version of the accounts. So we published the draft accounts at the end of May 24, in line with the statutory deadline. And as Jackson mentioned, the audit commenced in October, and we are, as at this moment, trying to finalise the last few review and adjustments of that, which needs to have happened by the end of February, which is the backstop deadline, which Jackson's also mentioned. So these accounts are not new accounts to you. They were presented to you in July. A lot of the adjustments have concluded at the back of the audit findings report, and I can just take you through some of those. We're in the final stage now of being audited, and we will be ready to publish by the end of February, I'm sure. It has been a long process, I think, of working with Grant Thornton while trying to manage the previous 4 years, but the team have worked really hard to get us to this position. It will be a disclaimed opinion for all the reasons that Jackson's explained. I did comment on some of the value for money recommendations in my report in terms of weaknesses identified in 23-24. So we talked, the medium-term financial strategy was approved in September 24, and there were also comments about children's services. So I just put in a few comments around that to update members with regard to the audit findings report recommendations. And in terms of changes from draft, there are a number of changes from draft because we've had to put through changes in relation to 1920, 2021, and flow those through. So, for example, the pension transaction has been adjusted. We've removed minimum revenue provision from the accounts. There were changes to the interest rate swap because it was not deemed to be a hedge transaction. So they're all listed in my report. and if anyone has any questions, I'm happy to take it. Attached as appendices, you have the letter of representation as Appendix B. This is the letter that we need to sign to send off to the auditors to say what work we've undertaken. We also need to have an updated signed copy of the annual governance statement to go alongside the statement of accounts. And I've included the draft opinion report, which I was just about able to include because it was received just before I published the report. So there are a number of recommendations which I'll hand over to, unless you want to do questions. So thank you, Chair.
So, any questions on the statement of accounts for 2023-24? So, as Carolyn's mentioned, with Councillor Freeman, you sure?
Just confirming no.
Our Section 151 officer is like saying, and?
Okay, so we've got 6 recommendations which are detailed on page 68 of the agenda pack, Appendix A. I'm happy to take these all 6 at once. Are we happy to agree all those recommendations, or does anyone want me to go through them one by one? Okay. Committee happy to agree the 6 recommendations? Wonderful, thank you. So now we move on to item 8. David, this is back to you for the for an update on the external audit recommendations.
And Chair, I'll be fairly swift on this one because we've just gone through the recommendations for 23-24. This is a standing item on here so that we do not lose those recommendations. So I've got nothing to report today, but in future meetings I will make sure that we update management responses and any dialogue that we have with Grant Thornton on those. So you may remember sort of all the way back through the 5 years that we've been talking about, there's 2 sort of ongoing, I think about sustainability, and there was another one, but I will roll that into a report. But I don't think I need to update today because Jackson's been through them fairly detailed, and you've got the first management responses to those.
Excellent, thank you, David. So if there's no questions, I'll move to item 9. And this is the updated Treasury Management Strategy for 2025 to 26. And I'm going to hand over to Wendy for this one.
Thank you, Chair. Yeah, this report is being brought back to Audit and Governance to note from the original approved on the 12th of November and incorporates the latest Treasury Management Strategy information that was published by Arlene Close in January 2025, and that includes economic updates, which there have been quite a few changes in the economy in the few months. The key changes in the document being presented are on page 262, with updates to the capital financing reflecting revised forecast. So the capital programme that we incorporated within our capital financing originally was up to a period of the 30th of September. We've now got the benefit of another quarter's monitoring, so that takes us up to the 31st of December, and that does actually align with the budget report that's going on the 24th of February. And it estimates the capital expenditure as is shown in point 4.1 on page 264. The forecast for new borrowing still remains at 4.5%, or our forecast. This is again reflected the January Arlene Close update, and subsequent to this, there has been a further Bank of England reduction to the Bank of England rate of 4.5, with a further small 25 basis points reductions expected throughout the year, and the forecast by Arlene Close at the end of the year is expected to be around the 3.75%. So we're sort of comfortable that at the moment with our 4.5% projection. Against Treasury Management revenue budgets, interest rate risk remains high, new borrowing, but it's worth noting that we have done, previous action taken have mitigated the risk. This has included fixing in long-term borrowing of 265 million and the sort of rate swap transaction, which covers temporary borrowing up to 75 million and sort of hedges our rate. So we're protected to the sort of difference between 0.56% and the SONIA or the sterling overnight rate. So we have quite a bit of protection against the interest rate risk that we've seen through temporary borrowing in the last couple of years. Our investment strategy is to continue to take a prudent approach of security first, liquidity, and then yield. So we've got a very good spread across in relatively easy access money market funds and our longer term pooled investments. A change to note in this latest version of the Treasury Management Strategy is we're releasing a balance of a previous voluntary overpayment of our minimum revenue provision of 634,000, and this is drawn down to support the 25-26 budget setting. Our borrowing strategy is striking an appropriate balance between the low risk of securing the best interest rate as well as the certainty of costs. So at this present time, interest rates are quite high, but going forward, we are looking at points where we can secure that cost and establish it in budgets going forward. Say Appendix A on page 288 is the updated Arling close economic and interest rate forecast as at December 24. Appendix B reflects our latest quarterly investment of debt position, and it's worth noting that over 50% of our current borrowing has either been fixed at PWLB rates from 1.37% or is the 75 million covered by the temporary borrowing rate swap at 0.56%. So you can see from our average rates, they are relatively controlled in times where things have been much higher. I say the council continues to use short-term money market funds to hold day-to-day surplus funds. Pooled funds are held with CCLA, Fidelity and Showmax, and they continue to deliver a good return through their dividends, and they were always seen as a sort of longer term investments. Obviously, we keep our minimal balances in cash, and you can see from the low rate of return the reason for that. Appendix C is actually a new appendix. This wasn't presented in the previous report, but it's setting out our Treasury Management budget for 25-26 against the previous reported forecast as part of the mid-year report, and this will be subject to being finalised as part of the 25-26 revenue budget approval. So that is the main changes with Treasury Management Strategy.
Thank you, Wendy. I should have also mentioned that the Head of Finance, Ollie Woodhams, is joining this part of the meeting online in case you're wondering what the initials were on the screen. So welcome, Ollie. Thank you. Does anyone have any questions on the Treasury Management Strategy, Mrs. Benny?
Thank you. It was just a specific one on page 266, the liability benchmark.
Yes.
And so when I looked at that, I was looking at that and interpreting it, and I suppose this is just a check for me sense-wise. So we've got the dark grey and the light grey.
Yes.
Showing a drop-off at 2072, 2074-ish, and around that area. But the other lines, so the dotted line, the red line and the blue line, is that showing what somebody elsewhere thinks should be happening? I wasn't sure how this compared with that's obviously showing real life for us currently.
Yes.
Yeah, but
so,
what does it mean in terms of those other three lines, please?
So the blue line or the top line is our our borrowing capital financing requirements. So this is what we currently borrow, our current capital financing requirement, plus the additional borrowing we're expected to be taking out as part to support our capital programme, less the provision we make for repayments, minimum revenue provision. So that's the grey line. The actual sort of the dotted line, which is the lower of the lines, is the net loans requirement. So this is where Treasury Manager, as part of the liability benchmark, it will make an assumption that will include provision for working balances, in the fact that we've got reserves, so we won't need to borrow all our money, because we get, like say, we have reserves, we have grants in advance, etc., which basically delay the need to borrow. So the actual liability benchmark, the red line, is sort of not a midpoint, but a point between that. The borrowing that's shown in the grey lines is showing really where our borrowing isn't following, where, because we've taken out so much borrowing long term, you would sort of expect our borrowing in your normal household terms would follow one of the top three lines. But actually, we've taken longer term borrowing. That's avoided the interest rate risk. So there's good, valid reasons for doing that. But obviously, the risk will come in those later years when we're still our capital financing requirement in theory will have come down, but obviously that's all in theory, because we've still got ambitious capital programs that we expect to carry on beyond the next 5 years. So this will change shape.
I was going to say that was going to be my next question. So presumably this is current day,
Yes,
with some knowledge about
yes.
the future.
What
However, we could expect that to change, maybe step down at a later date, depending on how much borrowing.
It's all those capital projects of the future that we've got no inkling of what they are.
Yeah.
But there'll be new roads being built and new buildings and everything that will be in there that will sort of change that shape. If we were to look back in 50 years' time, it would be a different shape again.
And then the next couple of years is showing a steep drop in terms of our borrowing. Yeah.
Yes,
so that almost gives provision.
That's our temporary borrowing, which again we will need to replace.
Yeah. So,
but we are balancing out an element of it of temporary borrowing, so we have got that flexibility. So, our opportunity with temporary and PWLB, because we do hold some PWLB for less than a year, is with any extra, say, capital receipts or any changes with any of the income coming into the council. So if, say, council tax collection rate goes up, we get more capital receipts, or we get more grants in advance, we can change the shape of our borrowing to limit our borrowing.
Thank you. And should I be reassured that actually overall that's a downward trend?
Yes.
If
like I say, if the capital programme stopped, we're still making provision for repaying our debt through our revenue budget. So in theory, it should drop off completely. But we know that the capital programme won't stop. And
no, thank you. That's helpful. Thank you.
The assurance I give myself is there is some white space between the upper lines and the blocks. The time to worry is when it's squeezing. Yeah.
Good to know. Councillor Rainsford.
Thank you, Chair. I've got a question which sort of requires you, I suspect, to look into a crystal ball. But it's about the lender option, borrower option, LOBO loans. Are we expecting, because they tend to be set at set dates when the lender can up or offer to up the interest rate. Are any of those sort of immediately likely to crop up? And what is our position? We repaid, I think, 10 million last year in the 24, 25 maybe. What's our position on that? Will we be actively looking to repay some of those longer term loans?
logos have been held for quite a few years. A lot of them were 70-year arrangements when they sort of were quite popular around 2006, 2007. We have had, and this is the first time we've ever had a call-in of a LOBO, or letter option, borrow option, and the way it operates is we get notice, and we've already made a sort of like part of our strategy is to repay the LOBOs as soon as we get any opportunity, because they tend to be higher interest rates than we can borrow. Obviously, at the moment, with the higher interest rate, we have some of the LOBOs were a lower interest rate than what we were able to borrow this year, but we're looking at it longer term, that whilst we will have a small additional cost in year, as the rates come down as they're projected to, we'll be able to then replace them at a lower rate. And when one of the 5 million options was called this year, we were given an option to continue the arrangement and pay it at 6%, which clearly we weren't keen on that one. Going forward in April, May, and I think November next year, we've actually got 3 LOBOs that are potentially going to be called, where I'm expecting one of those to be called because the rate is a lot lower than the 2 that have already been called. So that's just my assumption, but as soon as, like I say, as soon as we get the opportunity, we will look to replace them. We are fortunate. I think we're given about 4 or 5 working days, but they do actually contact us before, so we are able to make sure we have got sufficient funds, and we do keep a minimum balance in our money market funds. So if we needed to, we'll just take the money out there and repay it.
If I could just clarification. So the sort of chunks we're looking at are, I mean, overall we're looking at 54 million, but there are a series of loans at sort of 5, 10, those sorts of amounts.
Yeah, the highest we've got is 19 million, and the rest are 5 million chunks with about 2 or 3 different lenders.
Any further questions? No? Thank you, Wendy. I think item 10 is also yourself. So this is the so the recommendation is that we note the updated Treasury Management Strategy. This will be considered at the next City Council meeting next week on the 24th. And this is part of and it will form part of the annual revenue and capital budget report. We're happy to agree the recommendation. Excellent. So Wendy, item 10, back to you, and also to Ollie as well, watching.
Thank you, Chair. Right. So again, this report is being brought back to Audit and Governance to note from the original approved on the 12th of November, and incorporates again the main changes, incorporating the latest capital programme forecast up to the 31st of December 2024. Key points to note is the continued governance through the Capital Programme Officer Group, and onward approval of all new projects being added to the capital programme through the Capital Programme Board before the executive decision, sort of standard process. The 5-year capital programme included within this strategy is now based on a 5-year programme of 395,864, as detailed in Table 1 on page 927, together with how it is financed. Analysis on page 298 presents the amount and the percentage of financing by source, and it highlights that the grant funding remains the highest source at 35%. And then behind that is with 130 million borrowing coming through as service borrowing. So this is where the borrowing will be financed within the revenue services so that financing includes of that 130 million, nearly 69 million of it relates to the property regeneration fund, where the Economic Development Service will develop properties and new developments to generate, with the focus of generating an income as well as increasing employment, etc., and the economic benefit of that area. This report aligns to the Treasury Management Strategy and the financing of the capital programme within the Council's medium-term financial plans for revenue costs from both the interest and the minimum revenue provision. And that's the main, like I say, the main changes that we want to present. Thank you.
Thank you, Wendy. So I can see got a couple of hands up already. First of all, Councillor Nicholson and then Mrs. Benny.
Thank you very much indeed, Chair. It's just really a point to note on 298. I'm not sure I've quite seen a pictorial demonstration of our capital finance as stark, and I want to just make the point really just generally that we only really have 3% of developer contributions, yet developments have a massive impact on the life of our city, and it just begs the question, and nobody's going to be able to answer it here, but it does beg the question of whether the council is achieving as much from developers as they ought to be, given the fact that the huge developments in the joint local plan and in successive plans are having a major impact on the life of this city. So when you couple the 3% and the external grant funding of 35%, you know, ultimately 62% of many of the impacts that people are putting into Plymouth for a variety of reasons are being funded by the council taxpayer in various guises, either through council tax or other council assets. Capital receipts being one. It's still public assets. So it is actually quite interesting that we all want to see an expansion of our city and more people living in the city, but ultimately the inhabitants of this city are picking up the lion's share of the costs. And I just wonder at some point, perhaps we ought to be reviewing to see if we are achieving as much from developers as we ought to be, because 3% is a mighty contribution for massive schemes. We're talking about an awful lot of development in the city centre in coming years. I would hope that we get more than 3% contribution for some of those schemes. And when you look at Sherford, the impact's really on Plymouth. It's not on South Hams, but much of that development benefit is going to South Hams and Devon County Council. So I make the point, it's not really for you to answer, but I think it's well worth probably a debate in future by members of the council. Thank you.
Thank you, Councillor Nicholson. Mrs. Benny.
Thank you. It's just a quick question around the capital programme. So on page 297, we've got the 5-year capital programme by directorate, and having within the documentation, it's very clear that obviously there's an issue around inflation and the level of risk with the capital programme, and I'm just interested to understand the level of risk within the capital programme, or has it been de-risked to a certain extent? Because when I read the level of risk and then I see the figures, it's sort of like, is that still a massive risk, or has it been? Are there mitigations within?
I would say through time there has been a mitigation of risk, with certainly some of the high inflationary figures now lowering. We've still got an element of risk within there. Capital projects as general have built in a 5% contingency for the unknowns, but like I say, there is still, we can't hide the risk and the shortage of sometimes some materials, or where we've got to secure those materials from. So there is an element of risk, but I'd say through the Capital Programme Officer Group and Capital Programme Board, we are developing more intelligence on the actual delivery of the project, where there's risk coming through, and that'll be then contained or worked through with our regular monthly monitoring.
Thank you.
Councillor Nicholson.
Sorry, just going to say, I think it actually says it in the report. There will always be an element of risk, won't there, when you're, even if you stood back and watched your house being built, there's going to be a risk somewhere, and given a 400 million investment, there will be risk. But Wendy's comments are absolutely right. We're developing those, and we've also introduced something that we probably should have done sooner, which is lessons learned. So we'll take something like the bereavement project and say it's now complete. Let's sit down and look at the stages and what lessons can be learned from that, so that we can use that learning going forward. So just wanted to add that.
Thank you. Councillor Nicholson?
Thank you very much indeed. It's just following Mrs Bunny's question and the answer from Wendy. So how do we actually treat risk? Do we do a percentage of the overall cost of the scheme, or do we actually do an analysis of the risk register that accompanies the project? So I'm not sure we've ever had it, and I've obviously only been here since May, but has there been a presentation on how we treat risk and assess risk from an audit and governance?
Specific to capital.
Yeah.
Yeah.
Well, yeah, specific to capital projects. I don't know if we've ever had that in the work programme. You've been around on this, Sarah, a bit longer than me in this committee, but I don't know. It might be quite a good item. I'm not sure when if you answer the question, but it might be an item we might like a bit of a briefing on how we treat risk, because certainly some of the delegated decisions made by the leader of the council for some schemes have clearly we've underestimated the impact of risk and therefore have sought to put more money from the capital programme into these schemes. So it would be just a useful exercise to know how we treat risk, please.
Through you, Chair, quite happy to take that onto the work programme and pick that up probably early next year, something like that, and talk through the process. That's very useful.
Thank you.
Thank you. Any further questions or comments on the capital financing strategy? No? Excellent. I'm just going to check because Ollie's put his camera on. Did you have any comments to make or questions?
No, I think others have answered the questions on risks. Yeah, that's fine. Thank you.
Excellent. Just checking. So we'll move on to item 11, which we have a recommendation first. So this is just that we note the updated capital financing strategy that will go to City Council next week on the 24th of February as part of the annual revenue and capital budget setting report. Are we happy to agree that? Excellent. So item 11, adult social care debt management. David, I think this is over to you, and also Louise.
Thank you, Chair. Just very quick, I'll hand over to Louise because she's been working on this one. But members of the committee will remember at the last meeting there was a report that was a little bit rough around the edges, and I did call in a favour to say, let me take it away and work on it and get it updated. There were also some timing issues that we were having a board meeting the following week. So this is an updated report, but I'll hand that to Louise for the detail.
Thank you, David. Thank you, Chair. Good afternoon, everyone. On page 307 of your report pack, you will see an update to Audit and Governance Committee on the Adult Social Care Debt Management Report, which came to the previous Audit and Governance Committee in full. This report really is an update on the implementation of management action that was agreed as part of the finalisation of the audit report that was issued with a limited assurance opinion back in November 2024. Progress has been made in addressing the observations made in our original audit, with 6 of the 11 management actions having been fully implemented and 5 partially implemented. Whilst the overall level of assurance has improved, it does remain at the moment with limited assurance. However, it is anticipated that high priority actions will be completed by the 30th of April this year, which once implemented will increase the overall opinion to reasonable assurance. So work is ongoing. There is an adult social care debt board that meets regularly. That's a monthly board. They've got a formal terms of reference now. They have representatives from finance, from Live Well, South West, also from the adult social care team as well from the department, and legal, a member from audit as well. So there's a cross-party board there that's looking to tackle the issues with outstanding debt relating to adult social care. So on the report, you will see that I've split it into different sections, which brings forward the actual original audit recommendations in the first column. The second column actually indicates, so if I go down onto page 308, for example, the impact is of the original report. So as when we first issued the report, that was the impact of our original observation. The third column is the agreed management action that was agreed with management at the time. And then the fourth column is the actual update for yourselves to identify what's happened, with the final column indicating whether it's fully implemented, partially implemented, or no further action at this moment. But as you can see, as I indicated, and it's on the front page there, that 6 have been implemented. Sorry, hang on a minute. So 6 have been fully implemented and 5 partially implemented, and hopefully that will also be improved by the 30th of April, with the high risk actions being implemented in full. Thank you.
Thank you, Louise. Any questions on that one? Mrs. Penny and then Councillor Nicholson.
Thank you, that's brilliant. It was really helpful, and I may have missed it in this, but a lot of this was about sorting the previous stuff, wasn't it, and the backlog. And I suppose for me, there's almost something about setting the tone about the way we do business going forward, and managing that, as well as fighting the rearguard action, isn't it? You know, so I'm interested to understand. I'm hoping that with all these actions, we'll sort out the backlog and get that cleared and understand what can be recouped and what can't. But just looking at some of the issues around properties and the revenue from the properties disappearing into somebody's estate, etc., and the risk of counter fraud or fraud, you know, I suppose the bit for me is around how are we going to set our stall out going forward, and when will we achieve that? When are we going to behave differently as an organisation to be saying to the people, actually, yes, the money is owed and there'll be a process around this, and this is very serious, because it's very clear from the history that people get away with not paying, and that doesn't seem to be fair to every one of our population.
It's a very good observation, Mrs. Penny. I think because I deliberately didn't invite the experts into the room just to see how you might react to the fact that we've moved forward. So I think in terms of answering that question, we can do this one of two ways. We can either invite the key officers to come in and do a presentation or whatever, or my preferred route, probably given some of the sensitivities about this, would be to invite anyone on the committee that wants to join us, and we'll have a walk through the whole process, and then from that we can then come back and obviously have a discussion here about what you've learned and what your concerns might be, but rather than try and answer that now and get it wrong, if that's okay.
Yeah. Jay, can I come in on that point as well? Quite rightly been raised about concerns about the process and making sure that what happens from now on, we have a much clearer message to those who are responsible for owing us money through invoices or whatever. I do accept there are sensitivities to this, and I think it actually would be really useful to do a follow-up on how we are managing this now, as opposed to the mistakes we made in the past, you know, what we learned and how we're taking it forward.
Councillor Nicholson.
Thank you very much indeed, and thank the officers for bringing the report. I think it was a couple of meetings ago, or 2 or 3 meetings ago, that I raised this buried in one of the in the audit report. So I very much welcome the efforts that have gone in behind the scenes to tackle this, because, you know, to put it in context, it wasn't an issue 4 or 5 years ago. It's become an issue and it's grown. And it's not so much, I would suggest, the public not meeting their requirements of loved ones who may have deceased, but I think it might have been, to some extent, our own systems. And I say that having had just one example, of which the council helped me, where an estate was closed and the estate had never been billed for the costs of social care, and yet all the resources, obviously in accordance with the will, had been dispersed, and the invoice turned up like a year or 2 years late after the estate had been closed. So, you know, the processes are quite important. So this does give certain reassurance that things are being grabbed hold of, and sufficient resources being recruited to make sure our processes are fit for purpose. So well done for that. I certainly thank Mrs. Benny for her question and David's response, and Councillor Rainsford agreement. I think it would be useful to have a sort of a walk through the process to have an appreciation. But I would recommend, Chair, a slight amendment to the recommendation that we have, perhaps in 12 months' time, an updated report brought to the this committee, just providing a narrative for public consumption and members of the committee at that time of what progress has been made. And I would really appreciate the update, not so much necessarily from an auditing point of view, but actually a practical, the practicality of dealing with the issue. So what is the outstanding debt? A bit more about perhaps a narrative of why debt's being written off. Clearly we've had this with council tax. It gets to a stage when you can't recover certain debt and it has to be written off. But that should really be, as we move forward, the last resort. It shouldn't be, if something's all too difficult, therefore we'll write it off. Well, you physically can't recover the debt, so it has to be written off. So a little bit more around the narrative of that, perhaps in 12 months' time, would be really useful. But again, thank you through you, Chair, for the officers and their work since this was raised by the committee.
Okay, thank you, Councillor Nicholson. Councillor Freeman?
Yeah, I only had one little question on it where the report's really, really good, very informative. Back in September 24, the debt was £8.9 million. Do we know what the current figure is, please?
There's always a question that catches you out, isn't it? You think you're prepared. Sorry, Councillor Freeman, I will get that detail and distribute it across the committee.
Any further questions on this report? No? Okay, so the recommendation is to note the progress to implement of agreed management actions, but also with Councillor Nicholson's addition that we review this and meeting in 12 months' time, so we do this annually. Committee happy to agree that? Excellent, thank you very much. I'd like to welcome Glenda now, who's going to do a presentation on the newly rewritten civic protocol. Over to you, Glenda.
This one. Okay, thank you, Chair. Thank you, everybody, for inviting us to note the draft revised civic handbook, which we aim to be put in place in time for the new Lord Mayor taking office in May this year. Yeah, a bit of background history. The civic handbook serves as a reference to ensure consistency, professionalism, and adherence to traditions in the execution of civic duties for the Lord Mayor, the civic office, and the officers that offers a wraparound support to the Lord Mayor's office functions. Yeah, the Lord Mayor's handbook, civic handbook, had minor iterations in 2018, but the formal, as far as the records show, the last formal review was done in 2012. A lot has happened since 2012, and since I took over the Lord Mayor's office and the support that is offering to that office, we have been tracking feedback and lessons learned on how best we can support the office and the Lord Mayor. And last year, we have been asked to put together a task and finish group to review the civic handbook. A task and finish group was stood up, comprising of the Lord Mayor Selection Advisory Committee. It met 4 times. The membership was cross-party with all parties attending at least one meeting. And I think the handbook was reviewed and updated using best practice from other Lord Mayoralties. I think we spoke to Bristol, York, Southampton, Portsmouth, across the country. Whoever would like to listen to us and send us their best practice, we did. We contact them. Ask Hannah. She did it most of the job. Guidance from the National Association of Civic Officers, and of course, any change that we have to do, it has to go with the current budget that we have been given. I think we've sent it to the group, the major changes on the handbook. So I think what I can say is the handbook is more streamlined now. There is a very big difference in the handbook on what is the constitutional role of the Lord Mayor and what is civic role. and how we support both functions separately. And we are here, or I am here, on behalf of the Lord Mayor Support Office today for you to have a look and have a read, and hope you have, and to note so that we can have it operational from May this year onwards.
Okay, thank you, Glenda. Does anyone have any questions or comments about the new civic handbook? Councillor Nicholson.
Thank you, Chair, and thank you, Glenda. I do have some issue about the whole sort of process of the way this committee works, and generally when the council issues late agenda, well, items that are agendalised, but they don't come out 7 days before. So I apologise that I only asked on Monday, but I was in Birmingham away from the city without connectivity to council emails from midday on Thursday. I don't know, and I don't think, well, I know because I was the Lord Mayor in 2005, so I did actually know the ins and outs of the manual, having served as a Lord Mayor, and you're given it before you obviously seek to take the nomination. But I don't know how other members would assess whether the changes are good, bad or indifferent if you haven't got a comparison with what the current 2012, essentially the 2012 handbook would look like. And if you've never fulfilled the role of Lord Mayor, how do you know what you're being asked to agree? And what's quite interesting, you know, Glenda, obviously on behalf of the council, is saying, and also it aligns to the council's budget, and they are somewhat two separate issues, because it's for councillors on an annual basis set the budget, but this isn't going to be reviewed on an annual basis. So one would hope that actually there's enough flexibility in the handbook to allow the fortunate person to be the Lord Mayor of the city to flex their ability to fulfil the role as budgets might increase or decrease over the various financial years. Now, I've not been able to really have any or sufficient time to look at the email. I'm conscious that Councillor Freeman acknowledged the email, which is fine, but that doesn't actually tell me I've got to sit down and actually look at it. And I understand that the council has had a working group, fine. But this needs to go through the formal process, and this committee shouldn't just be a rubber stamping exercise. And I think we've demonstrated even today, the added value that members of this committee, both councillors and independent members, bring through sufficient scrutiny of paperwork to ask questions to get a better decision. And I don't think this item is one that we could actually do justice in the limited time that we've had the additional information and the contribution that Glenda's brought today. And I would perhaps propose that we defer it until the March meeting. It still would be in place before the May annual meeting of the council, so the incoming Lord Mayor would still have the benefit. But I think we want to make sure we get this right, that we just don't rubber stamp it. And I'd just like to understand what is being proposed, and if track changes can't be provided, then I'll dig my old copy out and I'll sit and compare it in the armchair at home rather than on the laptop, and actually understand what the changes are going to be. Because all I don't want is to diminish the role of the Lord Mayor. And what I have seen in the past few years, mainly through restrictions on council budget, is the role has diminished. And the danger is that basically the Lord Mayor is going to become a chairman of the council or chairperson of the council with very limited ability to do anything. And one example, when I was the Lord Mayor and subsequent Lord Mayors, but that it seemed to change, is that the Lord Mayor's car's more in the garage than it's being used by the Lord Mayor. So the Lord Mayor, there was a time when, and this I'm not sure reflected a later change, Glenda, before you joined the council, that the Lord Mayor couldn't be collected from their home. Now, clearly there are certain incumbents who don't drive, so I think that's been flexed. But it makes no sense whatsoever to have a mayoral car for it only to be that the incumbent have to come into the city centre when the engagement may be past their house. You know, there's nuances here that people wouldn't appreciate unless you fulfilled the role. And that's why I'd really hope that members would agree just to defer this item to the next meeting, and let's have a thorough chance to read what's being put to us to make sure it's good and fit for purpose for the future, and that Glenda doesn't have to keep going back every time there's a slight change in the council situation to amend the book that's before us today. Thank you.
Thank you, Councillor Nicholson. Councillor Rainsford, you indicated.
I do have to concur about the timing of papers. You know, it's difficult to know because we don't know what the changes were. I was actually going to ask a question of Glenda and say, you know, is she able to give some examples of the sort of changes that have occurred on this paper because it's not visible. But I'd be very happy for this to be deferred and for us to have a little bit longer to look at it. And, you know, Councillor Nicholson's experience as having been a Lord Mayor is important in this case.
Councillor Freeman and then Mrs Benny.
I would just like to say that I also agree with Councillor Nicholson and Councillor Rainsford. I did reply to Councillor Nicholson's email, but with the points that Councillor Nicholson has brought up today with regarding those changes and the relevance and importance of them, it's like, yeah, I think we'll need to defer.
Mrs Benny?
Thank you. I'm happy to support the proposal. In addition, I wonder whether there's an opportunity for us as almost a policy or the way we do business going forward is to actually offer a document which probably will not look as tidy as this or in any new revised documents, but actually one that shows the track changes so that we see the draft version being offered for approval with the track changes visible so that actually we understand where the changes have been made, because coming to it from an independent, I have none of the history, so I rely on understanding where changes are. So I also understand that it won't look as tidy when the document comes and goes into the pack, but it would enable me just to check and cross-refer, and I don't know whether that's possible going forward.
Thank you. If I recall correctly, there was some discussion by email about this agenda item. And there was some concerns raised about track changes, but perhaps a way forward would be to have sight of the 2012 mayoral handbook to compare the new one with. Would that be helpful?
I wasn't part of that email chain, so I don't understand the rationale for concern about track changes, or whether we could have it as a part 2 option so that it's very clear and transparent. I don't know.
I think it was literally just to do with the amount of changes would have made for a very lengthy and unclear document.
I'd be very happy to have the 2012 documents to do a comparison.
Councillor Freeman?
It's a little bit like when your banking terms and conditions change. Remove paragraph that says blah and replace with paragraph that says blah. That's as simple as it needs to be.
Through your chair, yes. I apologize. It is. We've met we met 4 times. The first one was to stand up the task and finish group, and then we had 3 meetings. So the reason why it wasn't we can't have the track changes because it went to 3 iterations. Yeah. So what we can do is the next meeting through your chair, if it's allowed, is get the 2012. And then the minor iterations in 2018, and what we changed. But what I can say is, of course, Councillor Nicholson, there is flex, there is the budget, and we have to work through that. But that doesn't mean that the Lord Mayor is cocooned into this is what you must do. The Lord Mayor will always have flex, and we always have flex on what is the priorities of the Lord Mayor on their Lord Mayoralty year. If I would like to go to do this, then we will flex the budget towards that one. But they need to understand that if they do a lot of that, there is a flex on the other side as well. Because I'm looking at our the money people who were saying, you know, it's gone are the days that we say, yeah, we can borrow a loan, we can get some more money. We can't. But rest assured that the Lord Mayor has more support than you had when you're Lord Mayor of Councillor Nicholson, because there's a wraparound support from business support as well. So you have the 2.8 FTEs upstairs plus the whole of member services on the ground floor. And that's how we flex it. Yeah, thank you.
To Nicholson?
So just on the track change point, thank you, Glenda, for that. I can't see any reason why we can't have the base document 2012, a different colour. I don't think, I'm not sure you can change the colour, but track changes for 2018, and then the final changes of the working group. I don't need to know what the working group discussed on on the 4 occasions, just their final recommendation. Quite a straightforward process. It's how sort of business works, as I'm sure you would appreciate, Chair. But in terms of the flex, I understand flex exists, but I also know that there have been Lord Mayors who have unfortunately fallen foul by politicians mainly, but using the book to wave it in front of them and say you can't do it. And you can't do this and you can't do that. So actually the book is quite important, that if there is flexibility, we have a little paragraph about flexibility. Because it's wrong that councillors who may fall out of favour while they're in office are beaten up by a book that's then used against the role, and that's not right.
Okay, thank you, Councillor Nicholson. I'm glad you're supportive of my suggestion of actually comparing the books and the amendments rather than every single track change that actually took place. So I think on that basis, can we agree to defer this item to the next Audit and Governance meeting? Brilliant. And thank you, Glenda, for your work on this and presenting this today.
And can the report, the book, be actually either issued ahead of the 7 days or on the 7 days when it's published?
We'll take that away. Thank you. So I think we now move to item 13, which is the tracking decisions on pages 65 to 68 of your agenda packs. And if there's no sort of comments or request for an amendment, we'll just note this tracking decisions document. Just give people a couple of minutes. So, all okay with this one? Brilliant. We'll move to the final item, which is the work programme. So we've already had a suggestion for the risk awareness training to be included. Anything else? No. Any suggestions as to when might be an ideal time for the risk training?
March looks very busy, doesn't it?
Yeah, this is what I'm a bit concerned about, especially as we've deferred the...
It looks very busy.
So April seems reasonable if members are in agreement. Okay, we'll add that. And anything else on the work programme?
Sorry, just in terms of the risk, but it's a general point. Can we try to, is there any possibility of having less paperwork? So like on the risk thing, you could probably do it on a couple of sides of A4, couldn't you? You know, can we try and just be conscious about the volume? Because trying to play through 300 pages is getting a bit, I can see why certain members probably get turned off by it. You know, I know that on the auditing report and stuff, we've probably got no option, but if there's any ability to reduce paperwork, I think it might be the order of the day.
I take that on board, Councillor Nicholson. I think, unfortunately, the statement of accounts is the statement, and that happens to be the sort of 114 pages. Look, let's look on the bright side. We shouldn't be coming back for about 12 months, okay? So that's that one taken away. Okay, but point taken.
Is there maybe a way we could have a sort of summary of headline points and then the rest of the pack as sort of detail backing that up if that has to be published? Is that the sort of thing you were thinking of?
I don't know, like on the statement of accounts, whether you had a report, then you had a link to it. So you're focusing more on the summary rather than ploughing through, 200 pages. I just think it'd be worth, I don't know how the public would manage going through any of these agendas because it's just horrific, isn't it? But whether that's some way of, again, trying to sort of manage time and focus on the more important document.
I could do that for the draft because we publish that in draft, but I can't for the published because we can't publish it until it's been audited and approved. So there are some limitations, I'm afraid.
Does that help, Councillor Nicholson? Okay, thank you. If there's nothing else, I will call this meeting of the Audit and Governance meeting to a close. Thank you all for your attendance and see you in March.